Now let's have a look at a transaction when we will be paying for expenses. On the 8th, paid 1,200 by debit card for stationery. Now the two accounts we can get from this transaction is bank, because of the word debit card, and the second account is stationery. And this will again go through the cash book, and it would go in the bank column. Now let's have a look at the effect of this transaction. Now the business had stationery before this purchase was made, and the business bank balance was $50,000 Namibian dollars. While after the business bought some new stationery with the value of 1,200 Namibian dollars, the bank balance decreased to 48,800 Namibian dollars. Also, the business previously paid for stationery worth 2,000 Namibian dollars, and now with the additional stationery bought by debit card of 1,200 Namibian dollars, the stationery now increased to 3,200 Namibian dollars. And as we can see, our bank moved from 50,000 to 48,800 Namibian dollars. That means that our bank balance decreased, and our stationery moved from 2,000 Namibian dollars to 3,200 Namibian dollars. So our stationery increased. So our bank is an asset, and our asset decreased, so we will enter that on the credit side. And our stationery is an expense, and our expense increased, so we would enter that on the debit side. Now let's complete this transaction. We have our cash book, but now the account we would open will be stationery, and our cash book will be credited with 1,200 in the bank column. Why? Because we are paying money out. We are paying money for stationery, and our stationery will be debited with 1,200, and the description will be bank, because we paid by debit card. And that will complete our double entry, because we have one entry on the debit side with a corresponding entry on the credit side with the same value. Let's move on to the next transaction.